The market might be tough, but don't lose hope. In this video, we'll explore 5 strategies to help you navigate the hurdles and achieve homeownership. Learn about crucial government resources like first-time homebuyer programs, and discover how working with a team that has your back, like a dedicated mortgage lender and real estate agent, can uncover hidden gems within your budget. Make sure to stick around to the end, and I will tell you about a little-known option for tapping into additional financial resources when buying your next home. Watch now and take your first steps towards your new home. Now let's get into this as you take your first steps into buying your new home. I'm Christian Harris, the founder of the C-Town Real Estate Team here in Seattle, Washington, and I love helping people like you make their dream of home ownership a reality. So though housing has gotten expensive over the years with property values going up and rates increasing, buying a house is still one of the best ways to build wealth. But before you buy, you need to know what you can afford. Most experts recommend limiting your mortgage costs to no more than 28% of your gross income, which means what you make before you account for taxes. Now that might not be attainable in this economy for everyone, but it can still be a good measuring stick. When you spend too much of your income on housing, you risk becoming house poor, meaning your housing costs are leaving you with too little to spend on everything else. So here are 5 tips on helping you achieve your dream of home ownership and building your own wealth over time. Number 1, tapping into government resources. The first thing to recognize when it comes to buying a home is that there are resources to help you, especially if you're part of a low-income household or if you're a first-time home buyer. The federal government has resources and programs to help people who are priced out of housing markets find housing. You can also look into state-specific home buying assistance programs. So here are some of the most beneficial programs to consider. You've got the Housing Choice Vouchers. So this is monthly rental assistance payments for eligible first-time home buyers and low-income households. These are vouchers that eligible home buyers can use to purchase a modest home in certain circumstances. You also have Indian Home Loan Guarantee Program. These are home loans for American Indians or Alaskan Native families to use both on and off native lands for purchasing a home, new construction, refinancing, or rehabilitation. Some of the benefits are they have low down payments and flexible underwriting standards. Now let's talk about some other funding options. Now a good lender can walk you through the nitty-gritty details of these, and I know many great lenders if you want a qualified vetted mortgage lender recommendation. So let's start with VA loans. These are home loans for veterans and active duty service members backed by the Department of Veteran Affairs. If you have a VA home loan eligibility, some of the benefits of this is you have limited closing costs, you have a no or low down payment option, and there's no PMI or private mortgage insurance. And one of the big things that a lot of people don't know, even veterans, is that if you have a VA disability rating of 10% or higher, your VA funding fee is waived. Now this can be substantial because if you're a first-time VA loan borrower and you put 0 down, that funding fee is going to be 2.15% of the total loan amount. If you put 5% down, that amount drops to 1.5, or 10% down and it drops to 1.25. So when you think about the price point of homes in Seattle, that VA funding fee could be thousands of dollars added to your closing costs. Now let's move on to FHA loans. So those can be beneficial because they have lower down payment options. I've seen as low as 3.5%. They have lower closing costs and easier credit qualifications. But the interest rate usually isn't as low as conventional loans, and it has permanent PMI. Now, if you don't know what private mortgage insurance is, this is insurance to cover the risk to the bank. This doesn't benefit you at all, but it can add substantially to your monthly mortgage amount. Now I bring this up because with a conventional loan, if you put 20% down or more, you waive the PMI requirement. Or if over time you build up equity in your house up to 20%, you can apply to get that PMI removed. Now with an FHA loan, that PMI is permanent. It doesn't matter how much equity you have, and the only way to get rid of it is either sell the house or refinance into a different type of loan. But frankly, if your credit isn't where it needs to be to qualify for a conventional loan, but you do qualify for an FHA loan, while you will need to pay for that PMI that's added as part of your monthly cost, you still have the option to buy a house, which is fantastic. Now another loan option is USDA loans, which you don't see a lot in Seattle because we're in a city, we're not in a rural community. This is a loan from the Department of Agriculture to single-family households to purchase, build, rehabilitate, and improve or relocate a dwelling in an eligible rural area with 100% financing. No money down if you qualify. Now listen up to this part. Here is a bonus option that very few people know about. If you have retirement accounts, you may be able to use some of those funds for your down payment. So for example, if you have an IRA, the IRS allows you to withdraw penalty-free up to $10,000 one time in your life for a first-time home purchase. And what they qualify as first-time home buyer is someone who hasn't owned a primary resident in the last 2 years. Or another example of using your retirement funds would be if you have a Roth IRA. Since this is an after-tax contribution retirement account, you can withdraw your contributions that you have made to this account at any time with no penalty. But you do want to make sure not to withdraw earnings, or you could be looking at a hefty early withdrawal penalty fee and taxes. But of course, these rules change from time to time, so you want to make sure to consult your lender and tax professional if you're considering considering tapping into your retirement account early. All right, so tip number 2, talk to a real estate professional about your options. Now, I'm a little biased on this because I am a real estate professional, but I have seen firsthand what happens when, buyers or sellers try to go it alone without the professional. It's kind of like, trying to represent yourself in court or looking up on WebMD and self-diagnosing instead of going to a doctor. There's a reason that there's professionals out there that can guide you through these complicated processes that require a lot of experience and knowledge to navigate. So if you want to buy a home but you have no idea how you're going to afford it or what the process looks like, obviously reach out to a real estate professional you trust. If you're in Seattle, I would love to help you. If you're in another area but you don't know someone, still reach out to me. I've got a massive network of trusted, vetted agents I can recommend to you. Some of the obvious benefits of working with a real estate agent on the buyer side is they can help you find a house within your budget range and help you negotiate for a lower price, better terms, make sure the house is in the condition you want it to be in, and guide you through the rather complicated process that has 3 or 4 different parties involved, including title and escrow and earnest money and all this complicated jargon in the real estate world. We will help guide you through all that. And you're probably thinking to yourself, well, how much is that going to cost me? Typically, sellers cover the cost of the buyer's agent fee. So a lot of times there's no additional money out of your pocket to work with an agent. So the majority of the time, there's no additional money out of pocket in order for you to have representation and someone in your corner representing you as your buyer's agent. Now, tip number 3 on helping you afford a house in an expensive market, make a plan to save while renting. So hopefully you've already been doing this, but we recognize that renting is often as much, if not more, expensive than a mortgage payment, and that makes it hard to save while renting. However, you usually won't have to pay for maintenance costs, property taxes, or the cost of replacing large appliances, so you may be able to put at least some of that money away towards savings for down payment. If you have the means, budget to save a goal amount each month. If it's an option for you, it can be a good idea to live with family or get a roommate to lessen rent prices and further increase your savings. Now, before I continue to my last 2 points, if this video has been helpful for you, please give me a thumbs up, leave a comment below. And I'd also like to thank you for watching this video by offering you my free buyer's guide that you can access in the description below. And if you have any additional questions or are ready to start the buying process, you can also schedule a free consultation call with me via Zoom. Now, tip number 4. Now, this one maybe not be as popular, but look for a home in a more affordable market. If home prices are too high in your area, consider looking in a different neighborhood, city, or even state. Housing costs vary significantly between locations, so you can find a house in a new area that's more affordable. The downside of finding a home in a more affordable area is that you might need to get a new job, have a longer commute, or make new friends. You have to consider whether the lower housing costs are worth those changes and compromises. And tip number 5, reset your expectations. Consider your must-have list. Make sure you write down the things that you want. If you have a partner or a spouse, you guys should write those down on 2 separate pieces of paper and then compare notes. Make sure you're on the same page. Is there anything on that list that's more of a want than a need? Like a short commute or a yard? Are your kids willing to share a room or a bathroom? Can you put up some walls or bookshelves to create a smaller room if you need to? Being thrifty is all about finding creative solutions. You also might have to open your mind to alternative housing like manufactured homes, fixer-uppers, or tiny homes that might actually be a great fit for you, even if it's just for the interim until you have saved enough to buy a traditional home or your ideal home. Revisit your budget and see if there's any wiggle room so you can put more money towards housing within your means, even if it means compromising on some things on your wish list. So if you have any questions about your specific situation or what's going on in the Seattle market, or you want to start your home search, please reach out to me. I'd be happy to help. Thanks for watching.